All rise. You may be seated. Deep breath. Okay. Hope everybody had a great lunch. We'll continue on. Mr. Smith, call your next witness.
Next witness is Descendus. Dylan, would you state for the record your name and by whom you're employed?
Sure. My name's Dylan, D-Y-L-A-N, Descendus, D-A-S-C-E-N-D-I-S, and I'm a partner at Scott Madden, Inc.
Did you pre-file both direct and rebuttal testimony in this case?
I did.
And if I were to ask you those questions today under oath, would your answers be the same?
They would.
Can you give the commission a brief summary of your direct and rebuttal testimony?
Sure. Good afternoon, commissioners. My name is Dylan Descendus, and I'm a partner at Scott Madden, Inc. I'm here to testify on behalf of Atmos Energy in support of its requested capital structure and return on common equity, or ROE, in this proceeding. The company's requested ROE in this proceeding is 10.41%, which is the result obtained by using the commission-approved existing stable rate adjustment rider formula. I have verified the reasonableness of the company's requested ROE by performing an independent analysis that applies the constant growth DCF model, or discounted cash flow, the capital asset pricing model, or CAPM, and the risk premium model to a proxy group of natural gas utilities and a proxy group of non-price regulated companies similar in total risk to the utility proxy group. The constant growth DCF and the risk premium regression analyses that I use are generally consistent with the commission-approved models used for Atmos Energy's and Mississippi Power's annual rate adjustment mechanisms. The application of these models to my proxy group indicate a range of ROEs from 10.43% to 11% before adjustment for company-specific risks and flotation adjustments. After adjustment, the ROE range applicable to Atmos Energy is from 10.51% to 11.08%. Given the results of my analysis, the company's requested ROE of 10.41 is a conservative measure of Atmos Energy's required return at this time. I've also verified the reasonableness of the company's requested capital structure, which is supported by the range of common equity ratios maintained and expected to be maintained by the utility proxy group, its operating subsidiaries, and the range of common equity ratios approved by regulatory commissions. Conversely, staff witness Mr. Mayu's recommended ROE of 9.40% and hypothetical capital structure consisting of 50% long-term debt, 50% common equity is woefully inadequate, and by Mr. Mayu's own admission may result in the degradation of Atmos Energy's credit quality. As I explained in my rebuttal testimony, such a result would violate the capital attraction standards articulated in the Hope and Bluefield U.S. Supreme Court decisions and should be rejected. My rebuttal testimony further explains that Mr. Mayu's analysis is loosely based upon Federal Energy Regulatory Commission, or FERC, guidance, which has not been accepted by any state regulatory jurisdiction, including Mississippi. His application of his ROE methods are also flawed. These facts further support the Commission's rejection of staff's recommendations in favor of the company's requested 10.41 ROE and the use of its actual capital structure to establish rates. That concludes my summary.
We tender Mr. Descendus to the Commission and to the staff.
Thank you, Mr. Smith. You recognize Mr. Jones.
Okay. Thank you, Mr. Chairman, Commissioners. Good afternoon, Mr. Descendus.
Good afternoon.
Okay. I want to ask you about some of your prior testimony on behalf of Atmos in other states.
Sure.
First, Colorado. Let me go there. I want to hand you your testimony from the state of Colorado in proceeding in the matter of advice letter number 584 filed by Atmos Energy Corp. To implement tariff sheet changes to be effective on September 5, 2022. And there's a copy of it for you.
Thank you, sir.
Yes, sir. You're welcome.
You want this entered, Mr. Jones?
Sir?
You want this entered?
Yes. I mean, do you recognize that as being a copy of your testimony, Mr. Descendus?
Yes, sir.
Okay. At this time, I'd like to have that moved as the next staff's exhibit into evidence.
No objection.
Hearing no objections, add that as, it's number 12.
Number 12.
Thank you. You may continue.
In this testimony, in this docketed case in Colorado that we have here, is it correct that in that docket you recommended an ROE of 10.95, but that Atmos settled for a 9.30 ROE, which is 1.65% lower than the recommendation that you made?
I wasn't aware, but generally settlements include a lot of different moving parts and are a package deal. So there's give and take, and sometimes it's ROE, sometimes it's something else.
Okay. You don't dispute that that's what they settled for, though, do you?
No, I mean, I don't know, but it's subject to
Okay.
check. I would agree with what you said.
Okay. If we could, well, I'll move on. Have you reviewed Mr. Christian's rebuttal exhibit JTC R2 that's already been moved into evidence in this case?
I haven't seen it, and I was looking to see if I had it on me, but if I could get a copy, I'd appreciate it.
Okay. Yeah.
I have a copy right here.
All right. Thank you.
I believe this is it, JTC R2.
Mm-hmm.
And are we finished with this Colorado, sir?
No, I didn't bring it with me.
Sir, are we finished with Colorado?
Yes, sir. For the time being, you can set that down. I've got a copy of it right here. Yeah, that exhibit, Mr. Christian's exhibit JTC R2 has already been admitted into evidence in this case, Mr. Descendus. And in that, if you'll flip to page 27, of 27 out of 30.
We're getting there.
Yeah, I'm trying to get there with you, bud.
Thank you, sir. I'm here.
Okay. And if you look there, do you see that in that docketed case in Colorado, that the approved ROE was 9.30?
Give me. Colorado. All right, I found it. Yes, sir.
Yeah. That's on page 27 of 30, and it says Colorado Atmos Energy Corp. ATO, and then under the Mr. Christian's category of authorized ROE, it reads that in that case, the ROE back then was 9.30. Okay, so that's established. Okay. Now, if we can, let's move on. Head back to Kansas. We were there yesterday.
Could I just correct the record for a moment? The Atmos Energy did not settle the 2022 Colorado case. That was an ordered decision by the Colorado Public Utilities Commission.
Oh, well, even better. So the PSC there, despite your recommendation of 10.95 and no agreement for Atmos to lower that, they set it at 9.30. Thank you, Ms. Bass.
Correct.
Now, let's move along to Kansas. I've got a copy of that here. It's a copy of your direct testimony and before the State Corporation Commission of the State of Kansas. It's docket number 19-ATMG 525 RTS. And Mr. Descendus, here's a copy of yours from that. I know you got a lot of paper, man. Sorry about that.
We're gonna get through it all.
No TV tray to put it on.
Need the TV tray.
Okay, would you agree with me that in that case, that
Mr. Jones, where are we at? I'm sorry.
that's just a general, his ROE recommendation in that case is flagged at, I think it's page 4. It is. It's on page 4 on Kansas.
Of Kansas, page 4 of
We
Kansas.
moved on from Colorado. We're in
Okay.
Kansas.
Thank you.
Okay. In that case, is it correct you recommended an Atmos ROE of 10.25?
Yes.
Okay. In either the commission set or the parties agreed to an ROE 1.15% lower, and that being a ROE of 9.10%.
Okay.
Okay. All righty. Now, if you would, let's leave Kansas and go to Kentucky. I've got a copy of your direct testimony before the Public Service Commission of the Commonwealth of Kentucky in case number 2024-00276, the most recent one up there.
Yeah.
Okay, and I'm going to hand you that.
I'm sorry. Thank you.
Sir. And let's go back to, for the purposes of the record, commissioners and Madam Court Reporter, on the Kansas testimony. Can we move that and have it marked as staff's exhibit next, which I think is 13?
No objection.
Okay.
Hearing no objection, Madam Court Reporter, add that.
All right. And now that we're on Kentucky.
Okay. Mr. Jones, sorry, excuse me.
Yes.
Okay.
Once. Thank you.
Okay, I think we're ready.
Okay, now we're on Kentucky, which staff moves to have that labeled as Exhibit 14 for the purposes of this hearing, staff's Exhibit 14. And with that done,
May continue, Mr. Jones.
in that docket, did you recommend an ROE of 10.95 for Atmos?
I did.
And are you aware that the Kentucky Commission ultimately adopted a 9.75 ROE, which is 1.2% lower than your recommendation?
I think that's right. I don't know if they, I knew there was an issue. I don't know if they continued to litigate it, though.
Okay. If you would, if you refer to Mr. Christian's exhibit, rebuttal exhibit JTC R2 on page 7 of that exhibit.
Yes.
Okay. And when you look down on it, as far as the Mr. Christian's information of the approved ROE by the Kentucky Public Service Commission for Atmos, that it is 9.75 appears there on page 7 by them.
Yes, I see it. I just don't know if they, I knew they had an issue with the capital structure, so I don't know if it's under rehearing or reconsideration. So
Okay.
I don't know if all that other stuff is also under reconsideration. That's all.
Okay. All right. Thank you. Now, if we could, let's move on to Texas. And I've got a copy of your testimony from the state of Texas in the Texas Commission, the Railroad Commission of Texas, case number 19196.
Thank you, sir.
Yes, sir, ma'am. And at this time, I'd like to make a motion to have that, the direct testimony of Mr. Descendus in that particular case in Texas entered into evidence as Staff Exhibit 15.
Hearing no objection, Madam Court Reporter, add that as item number 15.
Okay. Now, in that docket, in your testimony, did you recommend a 10.85 ROE for Atmos?
I did.
Okay. And are you aware that Atmos settled, or the Texas Railroad, the Railroad Commission of Texas actually set the ROE at 9.80, which is 1.05 lower than your recommendation?
I believe that one was a settlement, so I don't know whether or not it would be, precedent setting or incorporates any type of give and take between the parties.
Okay. So however it was, do you agree with me that that's whether the parties settled it or the Texas Commission just ordered it on their own, that the rate was 1.05% lower than your recommended rate of 10.85 ROE?
I'm still looking for what page is it on there?
If you look back, and again, I'm going to refer you back to Mr. Christian's rebuttal. He included that rate on page 29 of his exhibit.
Okay. Just dropped on my paper there.
Yeah, I know. It's hard to keep up with all this stuff.
Okay, I see it. Thank you.
Okay.
Yeah.
And on that, in Mr. Christian's list, it lists the approved ROE for Atmos in Texas in that particular case is 9.80. Would you agree there?
Yes, and the approved capital structure consisted of 60.97% equity, which is the actual capital structure at the time.
Yeah. In the ROE, though?
Yes.
9.80. All right, thank you.
Yep.
All righty. Now, if we can, let's move along to Mr. Descendus. I think this is my last state, and that would be the state of Virginia. And there's two items I'd like to hand you for the state of Virginia. The first one is a copy of your testimony
Okay.
in a Atmos case number PUR 218-14. And before the Virginia State Corporation Commission in its Atmos Energy Corporation case. I want to hand you that. And I've got a tab on it,
This is
a little yellow flag.
we got a little pre-pandemic here. Okay.
Yeah. In that testimony, which I'd like to have admitted as the next staff exhibit into evidence, if I could.
Any objection? Hearing no objection, Madam Court Reporter, add it.
Okay, thank you.
You may continue.
Thank you, sir. There, in that case, is it true that you recommended an ROE of 11.15%?
I did.
Okay. And would you agree with me that the commission ordered a 2.0 ROE in that case, which is 1.9% lower than your recommendation?
Not sure. It's been 7 years, so I wouldn't know exactly.
Okay. I want to hand you the next staff exhibit and evidence that I would like to have admitted. And it is a final order in that same case, the Commonwealth Virginia State Corporation Commission, case number PUR 218-14. 2018-0014. It's a final order, and I'm going to hand you a copy of that. And I have a flag there to reference what I'm talking to. I'm talking about Mr. Descendus. You need to flip through that. Everybody there?
Yes, sir. What, repeat that, which page?
Sir?
What page again?
It's on, I'm referring to page 6 of that order, the second paragraph, or the second full paragraph at the top of the page. And Mr. Descendus, in looking at that Virginia Commission order, final order, where you recommended 11.15% ROE, would you agree that the final order and the ROE set by the Virginia Commission, they didn't go with your recommendation? They went with 9.20 ROE, which is 1.95% lower than your recommendation. And if you refer to that second, I give you what they say in there.
So if you take a look at page 4 of that, in rebuttal testimony, I amend my recommendation to 10.40%. So it's not 1.9% difference.
Okay.
They did go with the staff recommendation in that case at 9.20%.
Okay. And what was your recommendation again? I'm sorry.
10.4.
10.4
Yes.
in that paragraph. So they went lower than yours. Is that correct? Of course.
They did. I said, you were saying 11.15, but
Yeah.
that wasn't my final recommendation.
Yes, sir. I apologize for that.
That's okay.
That should read that your final recommendation was 10.4%, and the Virginia rejected that and went with 9.20% ROE. Would you agree with that?
I would.
Okay. So these are recent cases that you testified on behalf of Atmos in these 5 other states. If we were to take the average across these states, these 5 states, the ROE you recommended was on average 1.4% higher than the ROE that was ultimately approved by these commissions. Does that sound about right?
The issue with this line of questioning is that my recommendation is, it's more of a affirmation of what the company is already asking for. The company is asking for the 10.41, which is based on the stable rate adjustment rider.
Yes.
Only my analysis is showing that it's a conservative measure.
Okay.
Of the so my recommendation is that the commission approves the existing stable rate ROE of 10.41 in this case.
Yeah, fair enough. Thank you.
So all these other ones are based on my models, my methods, etc.
Right.
This is based on my recommendation to say that these numbers are the company's request that's based on existing is reasonable.
Okay. And I thank you for that. But the fact remains that the commission found it more reasonable to award a 9.20. Is that fair?
In that case, yes.
Okay. And that same analysis apply to the other ones too. I mean, however you recommended. But anyway, let's move on from there. Here in this docket, Mississippi, you have an updated analysis in your rebuttal testimony, and it indicates an ROE range of 10.51 to 11.08. Would you agree with that?
That's right.
Okay. So, is it your testimony that, or that the 10.41 Atmos is requesting is actually too low?
I said it's conservative at this time. So I think if I would have asked for a higher number.
Okay.
Based on my analysis. But if you're looking at my analysis here, and if you look at page 2 of DWD1R, you could see that there's, and I don't know if you guys have it, so I'll wait for you if you want to turn to it. You can see that these numbers are focusing in on the mid-10s. You have between 10.4 and 11. And that would look like a 1070 midpoint. So I would say if you're looking at a midpoint, 1070 is higher than 1041. I would say that the 1041 is reasonable but conservative based on my unadjusted numbers.
All righty. And last question on your updated recommendation. You're recommending this docket an ROE between 10.51% to 11.8%.
11.08, yeah.
11.08%. If the prior pattern seen in other states were to happen here, and that's where whether it's your recommendation or the company's ask, that if that were to happen here in Mississippi, that this commission adopted an ROE that was 1.4% lower than either your recommendation or your opinion of the reasonableness of Atmos's recommendation. You follow?
I follow. I just don't agree with it. I mean, when
I hadn't finished the question yet.
Okay. Well, you asked me a question, and then you said, "Did you follow it?" I'm just not agreeing with it. So you did ask the question.
Yeah. Well, thank you for that instruction. If the prior pattern seen in other states were to happen here in Mississippi, that would result in an ROE somewhere between 9.11 and 9.68. Is that correct?
The math may be correct, but I don't agree with it. Offering some blanket adjustment to my analysis with no counter analysis to it makes no sense to me. If you look at Mr. Mayu's testimony and the way that he uses his models, and if he would have applied the FERC CAP-M the same way that FERC does it, you're looking at a number that has 11.08 at the end of it, and it would show that that company's 10.41% falls squarely within there, and that is on 7R. 7R is the corrected CAP-M based on the FERC methodology that he uses for his DCF. So if you look at his DCF, his FERC DCF and his FERC CAP-M, you put those together, you look at that and you say 1041 falls within that range. So I don't believe it. I don't think any of the analysis shows it. Mr. Mayu's recommending a number higher than that.
Well, I appreciate your answer, but my question wasn't about Mr. Mayu and his calculations. My question was to you directly based on the pattern seen in other states. If it were to happen here in Mississippi, meaning that the commission adopted an ROE that was 1.4% lower than your recommendation, that would result in an ROE somewhere between 9.11% and 9.68%.
What you're insinuating.
Is that math correct?
I agree with your math, but I think
that was my question.
Yeah, but you're insinuating that the commission's only going to.
I'm not insinuating anything. I just asked a question.
Can he finish his answer,
Hey,
please?
Order. Well, let's practice decorum. And yes, you have a right to answer, but the council has a right to explain the question more clearly. So again, answer the question best of your ability and don't talk over him if you can, Counselor.
Going back to simplify it, would that math be correct? Do you agree? You said you don't have a problem with the math, but explanation.
How about this? I don't agree with the premise of the question.
Okay. Well, so if you don't agree with the premise of the question, does that mean that you're not going to answer the question?
No, if you wanted me to explain why I don't agree with it, I can.
I didn't ask you why you don't agree. I just
why
asked you whether you agreed with the math, yes or no.
I don't agree with the premise, so why would I agree with the math?
Well, math is a simple calculation, is it not?
You're insinuating that each commission in each state just takes a blanket deduction off of company witnesses thing, and that's an insult to regulatory commissions and their staff. They look at the evidence and they weigh the evidence, and sometimes it breaks your way, sometimes it doesn't break your way. But to paint somebody,
I'll say just ignore any insinuation and just
All right.
answer the question. And any insinuation, will just ignore that, and then we'll answer the question best you
All
can.
right, I'm not answering the question.
That's an answer. Thanks.
Okay. There you go, Commissioners. Now, let's go to your legal opinions on Hope and Bluefield. And would you agree that Hope and Bluefield require the Commission to authorize a fair return on equity, one that's neither too low nor too high compared to similar investments, and that balances the interests of investors and taxpayers?
I agree with that, but there's also another couple legs to the stool. One being maintaining credit quality.
Okay, that's where we're getting to. Would you agree that the major intent of Hope and Bluefield, these are U.S. Supreme Court cases that I'm referring to, is to ensure that utilities can regularly access capital on reasonable terms?
It's at reasonable prices too. Of course, you could access capital, but it depends on the price of that you're willing to pay. And if you're allowing a return to have an unreasonable term, that's an issue that violates the capital attraction standard. At least in my lay opinion, because I'm not a lawyer.
Okay. In the words of Bluefield, would you agree that it says that the return should be reasonably sufficient to assure confidence in the financial soundness of the utility and to maintain its credit, correct?
Yes, that's what it says in my rebuttal at page 7.
Okay. You indicate that Atmos actually adopted Mr. Mayhew's recommended capital, if they did adopt Mr. Mayhew's recommended capital structure, that Atmos would be downgraded, and you believe that this would violate Hope and Bluefield's financial integrity requirement. Is that correct?
Can you repeat that question? Because I don't think I made that statement.
Yeah. In your rebuttal,
How about you point me to where I say it in my rebuttal, please?
In your rebuttal, do you indicate that if Atmos actually adopted Mr. Mayhew's recommended capital structure, then Atmos would be downgraded?
Can you please?
Willing to tell him what page of this rebuttal you're making reference?
Do you have your rebuttal testimony in
Yes,
front
and
of
it doesn't say that.
you? Okay. So you don't agree?
No, it
That's
says.
my question.
This is what I'm saying. Do you want me to read page 8?
No, I just wanted you to answer the question.
So it says on pages 114 and 115 of his direct testimony, Mr. Mayhew states that if Atmos Energy has an actual capital structure that contained 50% equity, Atmos Energy's credit rating would be downgraded at least one credit rating notch. While Mr. Mayhew stopped short of saying that the Commission's approval of a 50% equity ratio in this proceeding would have that effect, allowance of a capital structure with an equity ratio lower than the company's actual capital structure would diminish the company's credit quality. As such, Mr. Mayhew's recommended return would violate the financial integrity requirement of a fair return set forth in the Hope and Bluefield U.S. Supreme Court decisions and should be dismissed by the Commission. So no, I was using Mr. Mayhew's words to make a point.
Okay. And thank you for that point. So it's your belief that Hope and Bluefield's requirement to maintain credit should be interpreted to mean maintain the same credit ratings or the same credit metrics and the same credit quality?
Maintain sounds like a pretty easy word to come with being the same. So yes, I do. If there's a downgrade in credit quality, which would be a credit rating or maybe even an outlook change, that's not maintaining the company's credit.
Okay. So based on the requirement to maintain its credit, is it your belief that Hope and Bluefield require regulatory commissions to authorize a higher equity ratio and or a higher ROE in order to prevent or reverse a credit rating downgrade?
No, that's maintain. Same thing. If the commissions, I don't think it's. I mean, if they do get an upgrade, fine. But there isn't anything that says commission should be supporting increasing credit ratings of the companies. It's to keep them kind of do no harm.
Right.
And what Mr. Mayu's saying is, yeah, this is going to do harm to the company. So I can't even in good faith say that his recommendation would be reasonable at all.
Okay. Well, are you aware that the phrase credit rating does not appear anywhere in Hope and Bluefield? Credit ratings.
Maintain and support his credit, yeah, not credit ratings, but
Yeah.
assure confidence in the financial integrity of the enterprise. So I mean, when you're talking about maintenance and credit and financial integrity, anything, and what we're asking for, or what I'm asking for, what I'm recommending is to have the commission.
Your Honor, I asked him a question. I didn't ask him what his recommendation was. I simply asked him, are you aware that the phrase credit ratings doesn't appear in Hope and Bluefield? Please summarize again what you're asking. I mean,
Let's let him answer we'll let him answer the question.
Now I lost my place.
Yeah,
All right, I'm just saying, I'm just asking the commission to approve what the company's, the actual cost of the company, which is the capital structure, which is it may be at the high end of the capital structure range. It's a capital structure that exists, and a fair return on equity, which is based on a commission-approved model, such as the constant growth DCF and the risk premium model that you guys have been using for years and years and years.
okay. Now, would it also be your opinion that Hope and Bluefield would require the commission to authorize a lower equity ratio and/or a lower ROE in order to prevent or reverse a credit rating upgrade?
Again, it's maintenance. So say if Atmos was upgraded to A1, and then it would be downgraded to A2 based on a commission order, I would say that that's not maintaining it. It would be degrading it. So I would say that if the commission would make an action that would lower the investment, or not the investment, the credit quality of the enterprise, any enterprise, I would assume that would be against Hope and Bluefield.
Okay. Are you aware, Mr. Descendus, you were in the courtroom during Mr. Christian's testimony, were you not?
I was.
Did you hear the references to a list of company and their equity ratios? I believe it's Mr. Christian's rebuttal exhibit that we've been talking about.
The range of equity ratios, right?
Yeah.
Yeah.
The references to all that solution.
Yeah, the operating companies, the
right.
ones that are regulated. Yes, go ahead.
Did you happen to hear Mr. Christian and Ms. Bass talking about CenterPoint and an equity ratio in the 60s?
Okay.
Did you?
I recall it. I don't know the specifics of it.
Okay. Are you aware that CenterPoint uses a 50% cap structure in rate making in Mississippi?
I wouldn't know that. I don't represent CenterPoint.
Okay. So you weren't aware of that fact?
No.
Okay. I tender to witness. Thank you, Mr. Descendus.
Thank you.
Thank you, Ms. Jones. Ms. Bass, you're recognized.
Dylan, Mr. Descendus, you were here for Mr. Christian's testimony, and are you also familiar with the Moody's framework for determining, for analyzing credit ratings for utilities?
I am.
And the first one of those was regulatory framework, right?
Yes.
25%. And Mr. Christian, in his memory, has said that this Public Service Commission here has had a relatively high rating as far as the credit rating agencies go for providing a positive regulatory framework, correct?
Yeah, and it makes sense because you guys have the stable rate, you have a nice, clear, and transparent way of setting rates. You have helpful mechanisms. There's a lot of things that investors, not only debt investors but equity investors, would like in a regulatory commission.
And you were asked some questions about orders in Colorado, Kansas, and Kentucky, in which you testified on behalf of the company, correct?
I did. One more thing with the Mississippi regulatory climate. A departure from kind of going from the stable rate and going from authorized and actual capital structures, that would introduce kind of some murkiness, some I guess not straightforward, not transparent work. So then when you're looking at investors, and it wouldn't only be Atmos, it would be Entergy, it would be Mississippi Power, because they're all regulated by Mississippi Public Service Commission. So if you go that way, and the more mucky these rate cases get, the more, I guess, uncertain outcomes are. And then not only S&P capital IQ ratings go down, then Moody's characterization of the constructiveness of the jurisdiction goes down, and things like that. So the more that you stray from something that's already tried and true may be a problem going forward.
Thank you. And you were asked about your testimony in some rate cases in the jurisdictions of Colorado, Kansas, and Kentucky, correct?
Yes.
And based on your knowledge and expertise, what is the regulatory climate or framework considered in those states compared to Mississippi?
They are less than Mississippi, generally.
And is that a function of the lower than market ROEs that the commissions have been issuing in those states over time?
Yes, and again, I think Mr. Christian put it together pretty well. Kentucky used to be a very good jurisdiction, and then they started meddling in settlements and changing the ways that they perceived models and things like that. And then all of a sudden, you go from being a very good jurisdiction to a very bad one, and investors don't like that.
So, a quick question on a follow-up on that. So out of the ones that we discussed, that the ask was one number and then the settlement was a lower number.
Yeah.
Did that negatively impact Colorado, Texas, Kansas, and some of the other ones that we talked about today? How did that impact their Moody's credit rating?
I don't know. And then especially when it comes to Virginia and Kansas, they're significantly smaller than say Texas, right? And at least for Atmos, their biggest piece is their intrastate pipeline. So if anything happened to say their big pieces, it would be more dangerous to them. So Kansas, I think, is the smallest, and then Virginia is the second smallest.
How about the Texas one?
The Texas one, I don't think it changed it, but they did get downgraded earlier. I didn't read the credit report or the rationale behind it. But generally, as if you're thinking theoretically, the higher, so there's discussion after you spend all your money for everything that makes safe and reliable service, and they were talking about proactive versus reactive capital spends. Those proactive capital spends theoretically would go to the highest ROEs. So then the ones with lower ROEs would be more reactive, and that's where you would go, at least since you're going to be reporting to shareholders and things like that. So
okay, thank you for the answer.
Yep.
You may continue, Ms. Bass. Thank you.
Thank you. And on that point, so So we talked about Colorado, Kansas, and Kentucky. And you or your firm provided testimony in the Kentucky case and discussed with Mr. Jones that that was a 9.75% ROE outcome in that case.
Yes, ma'am.
Was that an improvement in Kentucky?
It was.
So is it true to say that the Kentucky Commission is moving closer towards allowing ROEs that align with the formulas that you use in your methodologies?
It is moving closer to my recommendations.
It's not there yet, but it's moving closer.
Right.
Okay, and in Texas, Tennessee, Virginia, Louisiana, and Mississippi, does the company have an authorized ROE of 9.8 or higher?
In all of them?
Mm-hmm.
I don't know that.
Well, let's walk through them. Mr. Jones told you that in Texas, our recent rate case was 9.8, correct?
Right.
Okay, and you have provided the calculation in the past for Mississippi and likely reviewed. You saw the calculation based
Yes.
on the formula. Mississippi was 10.41 in this case.
Yep.
Correct. And in Louisiana, it's 9.8 as part of a negotiated annual mechanism, correct?
Yes.
And in Virginia, in which Mr. Jones asked you about an old Virginia case, but the most recent Virginia case that was decided in 2023, your firm provided testimony, and that ROE was 9.9%, correct?
It's convenient.
And so, and you talked about the size of our jurisdictions and what impacts. Based on your representation of Atmos Energy, would you agree with me that about 80% of the business is in Texas, Mississippi, and Louisiana?
Yes.
And so if there were to be negative decisions that would impact the company, it would be those three states, correct?
Absolutely.
Okay. Have you done the ROE calculation for the stable rate in the past?
I have.
And has the calculation that you have performed been approved by this commission?
It has.
Do you still do the calculation for the stable rate?
I do not.
Who does that calculation?
Dr. Fairchild.
And do you know why Dr. Fairchild does that calculation?
The staff requested for him to do it.
And did the company make modifications to its ROE formula based on the request of the staff when they made that request about Dr. Fairchild?
I don't know.
Okay. Well, what else? I'm tired today. Okay. So were the ROEs produced by that formula in line with the ROE produced by the formula in this case?
Yes.
And Dr. Fairchild, the staff's consultant, made that calculation, not you.
Right.
So your testimony only says that while it's conservative, that ROE at 10.41 is within a reasonable range that should be approved by this commission.
It is.
Oh, and I wanted to pull up, Connor, you ready? I wanted to pull up JTC R2 for you again.
Connor, you're up.
Okay, you have it in front of you, but we've got it on the screen here. Could you compare, you were asked about capital structures approved, and I just want you to compare for me the column F that says requested common equity to total capital and column I that has the authorized. And tell me if you see a wide range of difference between those numbers.
So generally, if you take a look at column F and you take a look at column I, the companies, or at least the authorized common equity ratio, generally is accepted as presented by the company. And generally, and I can't say always because I haven't looked at all of these, but they're generally based on actual capital structures. So when you go down and there's 30 pages of this, so we're not going to go down all of them. But if you want to look at the post-hearing brief, and we could put it in there, a lot of the requested equity ratios are the authorized equity ratios, and it's because they're based on actual capital structure.
Okay, and there's one of these that's curious to me. Line 11 there. It's a Florida decision, and my eyesight is so bad I can't read the utility. Pivotal Utility Holdings Inc.
Yeah, I think
You
that's
see that?
Florida Gas.
Florida Gas. Okay, and can you tell me the requested and the authorized in that line?
So they asked for a 52.56% equity ratio and received a 59.6 equity ratio.
And why do you think that is?
I wasn't the witness in the case, so I don't know. There may have been some known and measurable changes that changed their capital structure, but I'm not sure.
And maybe similar to the case in which you discussed and where your rebuttal testimony recommended a different ROE than your direct testimony. Why? And that was because why?
It could have been an update. Yeah, it could have been an update reflecting market conditions or new
equity
issuances.
issuances and,
Yep.
and things like that. But
Yep.
okay, I just wanted to get that, and I have no further questions for you.
Thank you.
Thank you, Ms. Bass. Thank you,
Thank you.
Mr. Descendus. Mr. Smith, call your next witness.
Oh, Joel Mueller.
Oh, I'm sorry, excuse me.
Molter.
What?
Yes.
I can read my own writing.
Hey, Mr. Smith, we're going to take a 5-minute recess.
Sure.
All rise. I'm just kidding. I was saying thank y'all. Sorry, we have fun at the commission as well as work hard, so thank y'all for indulging us. Mr. Smith, call your next witness.
We call Joel Molter. Mr. Molter, would you state for the record your name and by whom you're employed?
My name is Joel Molter, and I'm employed by Atmos Energy Corporation.
If you will get a little closer to the mic, I'm sorry.
You bet.
Thank you.
My name is Joel Molter, and I'm employed by Atmos Energy Corporation.
Thank you.
And in what position?
I'm the Vice President of Tax.
Did you file both direct and rebuttal testimony in this case?
Yes, I did.
And if I ask you the questions and the testimony under oath today, would your answers be the same?
Yes, they would.
Can you give the commission a brief summary of your direct and rebuttal testimony?
Yes. Good afternoon, Commissioners. My name is Joel Molter. I'm the Vice President of Tax for Atmos Energy Corporation. In this role, I oversee the tax filings and financial reporting of taxes for the company. My direct and rebuttal testimony in this case supports the tax elements within the company's revenue requirement model, including income tax expense and the amount of accumulated deferred income taxes within rate base. The primary tax positions raised by the staff relate to two deferred income tax items that are included within the company's rate base calculation. First being deferred tax asset associated with the utility's net operating loss carryover, and the second item being a deferred tax asset associated with payments of the corporate alternative minimum tax and corresponding carryover of corporate alternative minimum tax credits. The deferred tax asset associated with the utility's net operating loss carryover has been included within rate base of the company's various utility rate filings since its inception in 2009. The deferred taxes included within this filing, including the net operating loss carry forward deferred tax asset, represent the amount of income tax expense paid for by Mississippi customers that has been deferred and yet to be paid to the federal government. This amount does not reflect the assets, liabilities, income, or expense of the company's other utility divisions or its non-regulated entities. Consequently, none of the income tax expense or benefits associated with these other jurisdictions or non-regulated entities should be reflected in this filing. The amount of the net operating loss carry forward related deferred tax asset included in this filing has been determined using well-established formulaic rate-making methodology that is consistently applied in each of the company's 8 regulated jurisdictions to determine the net operating losses of each jurisdiction. Regarding the second issue, the enactment of the corporate alternative minimum tax does not impact the company's income tax expense, but does increase the amount of income tax payments that are due and thereby reduces the amount of income taxes otherwise deferred. As a result, this reduced deferral, as it relates to the regulated earnings of the Mississippi division, must be reflected within the accumulated deferred income tax component of rate base in order to maintain consistency between the amount of income tax expense collected from Mississippi customers in rates and the actual amount of that income tax expense that has been deferred and yet to be remitted to the federal government.
We tender the witness for cross.
Thank you, Mr. Smith. Ms. Kruger, you're recognized.
Thank you.
Thank you.
Good afternoon, Mr. Molter.
Good afternoon.
Mr. Molter, would you agree this is a complicated subject matter. Would you agree that there are very few people who readily understand the issues surrounding net operating loss carry forward, accumulated deferred income taxes, or ADIT?
Sure, I'll agree with that.
And even fewer who understand NOLC ADIT impacts on utility rate making? Would you agree?
Sure, I'll agree.
So I'm going to try to streamline that and identify the issues with some streamlined questions. I know we fundamentally disagree about the methodology, so I'll just try to get to the issue. Do you agree that beginning in 2009, net operating loss carryforwards generated by the regulated utility divisions have lowered the amount of taxes that would have otherwise been paid on Atmos's consolidated taxes?
They have played a part. The The taxable losses of the utility division, along with the taxable income of our unregulated entities together, have created the ability to defer otherwise owed tax payments.
So you said they played a part, so you don't deny that.
That's correct.
Do you agree that those taxes that would have been paid were based on positive taxable income that was generated from other regulated activities of Atmos?
Could you state that one more time, please?
Do you agree that those taxes that would have been paid were based on positive taxable income that was generated from other regulated activities of Atmos?
Yes.
Do you agree that Atmos's use of those NOLCs on its consolidated tax returns to lower its tax liability generated a $189.2 million NOLC ADIT credit in the deferred tax walk schedules that Atmos produced as support for the rate case?
Yes.
Do you agree, Mr. Molter, that without the adjustment Atmos proposes, that that credit would reduce Atmos Mississippi division rate base by its allocable portion of that $189.2 million credit, correct?
Could you please restate that?
Without the adjustment that Atmos proposes, that credit that we just discussed, that credit would reduce Atmos Mississippi division rate base by its allocable portion of that credit in the amount of $189.2 million.
Could you describe the adjustment that Atmos, you're saying Atmos proposes?
Okay, let me rephrase. Why does Atmos have to propose an adjustment if it is not reducing rate base?
I'm not sure what adjustment you're referring to.
Okay. Okay, we'll look at an exhibit so I can show you what I'm talking about. This will be exhibit RLS-11. What are we on, 18? 18?
1-8, yeah.
Okay, Mr. Molter, I've just handed you exhibit RLS-011, which is an exhibit from the direct testimony of Mr. Lane Sisung, filed into this docket on August 21st, 2025, and which is anticipated to be moved into the record when his direct testimony is admitted. Do you recognize this exhibit as the ADIT information provided to the staff from Atmos?
I do.
I would like to identify for the record exhibit RLS-011, which is an exhibit to the direct testimony of R. Lane Sisung, and I believe staff exhibit 18 in this record. Mr. Molter, let's look at the bottom of page 6.
Are you adding that to the record? Okay. No objection?
No objection.
Add it to the record, please. Sorry, you may continue.
Mr. Molter, could you please look at the bottom of page 6 of that exhibit?
Yes.
Are you there?
Yes.
Okay. Can you confirm that this deferred tax walk shows for Division 2, 3 federal net operating loss carry forward ADIT accounts, which are numbered 126 at the bottom of page 6, and then onto page 7 we get to 127 and 128, those
Yes.
ADIT accounts. Mm-hmm. So let's look at account 126. That account has a negative balance prior to the Atmos proposed adjustment of negative $189 million $193,355 for non-reg NOLC ADIT, correct?
Correct.
And let's go to page 7. Account 127 has a positive balance prior to the proposed Atmos adjustment of $605,487,238 for what is titled Utility NOLC ADIT, correct?
Correct.
And account 128 has a positive balance of $9,276,701, correct?
Correct.
Do you agree that the positive amount of the NOLC ADIT from this exhibit results in an increase in rate base?
Yes, correct. I agree.
Do you agree that negative amounts of NOLC ADIT from this exhibit result in a decrease to rate base?
No, it's no impact to rate base.
Circling back to account 126, do you agree that Atmos proposes an adjustment of a positive $189,193,355 to eliminate that negative balance?
Agree.
So the effect of Atmos's proposed adjustment increases rate base, correct?
Said that way, I'll agree with you. I view it as the starting point being 0, but you're going. But said the way you did, I agree with you.
Court's indulgence for 1 second.
Yes.
Okay, thank you, Mr. Molter. And you acknowledge that shareholders continue to experience the prior tax savings received from the past lower taxes that were lowered by the use of the NOLCs generated by the utility division, correct?
Can you please state that one more time?
Do you acknowledge that shareholders continue to experience the prior tax savings received from the past lower taxes that were lowered by the use of the NOLCs generated by the utility division?
Yes.
No further questions. Thank you, Mr. Molter.
No questions from the commission. Okay.
So,
Thank you, Ms. Kruger.
Mr. Perry and my co-counsel is going to read.
Ms. Perrin, you're recognized. Thank you.
Good afternoon, Mr. Molter.
Good afternoon.
I'm going to ask you some questions. Maybe we can be guided through with this exhibit RLS 11. And I want to start off, there was a phrase that you used when Ms. Kruger asked you a question about the lowering of taxes by the NOLC, and you said something came together. Can you expand on that for the commission?
I'm sorry, could you say that one more time?
When you said something came together,
Oh,
I think you were talking about income and
Yes.
NOL, but I don't
Yes.
want to say it. I want to hear you say
yeah,
it.
sure. The example maybe I'll give is one that I lay out in my rebuttal testimony, I think beginning on page 18. And I discuss, a little bit of what we were just talking through in the Q&A about a tax benefit, a tax deferral benefit of filing a consolidated income tax return. And the way I would describe that is, let's say that there are two independent utility companies, right? And let's say that one has $1,000 of earnings, and at a 21% tax rate, they would owe $210 of taxes to the government. And let's say the other utility has the opposite. They have enough tax deductions such that they actually have $1,000 of tax loss. And so they have a tax benefit from that loss of $210, but they can't receive any any current benefit for that. The tax code does allow that loss to be carried forward into the future, and if they have income in the future, they can use that tax loss to offset their income in the future. And that's how they would get that benefit of $210, but it has no immediate benefit. So if these two utilities were to file their own independent tax returns, right, the first company would owe $210 to the government, and the second company with the loss would get no benefit, but they could carry their loss forward. So independently, if you summed up their results, there'd be a $210 obligation to the federal government. If they have the same ownership, the tax code actually requires the filing of a consolidated tax return. And when you file a consolidated tax return, one of the benefits is that the income of a entity that joins in filing that tax return can be offset with losses of entities that go into the joining and filing that tax return. And so in that example where the income of $1,000 of one company and the other company has a $1,000 loss, and they naturally offset each other, in that case, that would be the result of filing the tax return. And that consolidated company would owe no current taxes. And so comparing that to the situation where they file independently, $210 of taxes have been deferred into a future tax period. And so I described that coming together, netting, as both are needed, right? To accomplish a tax deferral because of a consolidated tax return, the taxable loss entities that go into the return are needed just as much as the taxable income companies. And so that tax deferral can't be tied or connected to either the loss company or the income company directly, right? Both are necessary. You must have income and losses. And so when it comes into a rate-making context, the consolidated tax return is less of a subject matter. What matters is looking to the revenue requirement formula of a specific jurisdiction and the revenues, expenses, assets, liabilities that go into that formula calculation. And you look to determine the amount of tax expense that is based on those revenues and those assets and expenses and liabilities, and how much of that specific tax expense is able to be deferred. And that's the connection. That deferral then would go into rate base as a credit, reducing rate base, because that is taxes customers have paid for that have yet to go out the door to the federal government. Makes sense for that to be a credit, reducing rate base to give customers the benefit of that deferral.
All right. So we have two things coming together, and the question is, I guess, for the commission and for other regulators that regulate Atmos Energy is, well, what do you do with that? And can you tell the commission what you do with that in every jurisdiction?
Yeah. So in each of our jurisdictions, in Mississippi and our 7 other jurisdictions, that deferral doesn't go into any of our rate-based calculations. And the reason being is, in this case, right, the income companies that drive the assistance to that tax benefit, those are all unregulated entities. So none of their revenues, none of the revenues or expenses, assets, liabilities of our unregulated operations go into any of our rate-regulated filings. We don't ask customers to pay for any of those assets or expenses, right? And therefore, any of the associated income tax benefits or expenses also don't go into any of our rate-regulated filings. And that's been something we've consistently done in each of the states that Atmos Energy operates within.
I have no further questions for Mr. Molter.
Thank you, Mr. Perrin. Thank you, Ms. Molter.
Mr. Chairman, we call Thomas Fruit.
Oh, sorry, I forgot to consult with co-counsel. We would, if it's okay with the staff, we would like to call Dane Watson out of order, since Mr. Watson has travel arrangements that would, he would not have to change if he could testify today.
Okay,
No objection from the staff to
Okay.
change the order.
Thank you. Thank you all for working together.
We call Dane Watson. Watson, would you state for the record your name and by whom you're employed?
My name is Dane Watson. I'm managing partner of Alliance Consulting Group.
did you file direct and rebuttal testimony in this matter?
I did.
If I ask you the questions in that testimony under oath here today, would your answers be the same?
They would.
Could you briefly summarize for the commission both your direct and rebuttal testimony?
Yes. Well, good afternoon, Commissioners. My name is Dane Watson, and I'm here to answer any depreciated related questions that you have. As I said, I'm managing partner of Alliance Consulting Group, and I'm here today on behalf of Atmos Energy in support of the depreciation study I performed for the Mississippi Division assets as of September 30th, 2024. I also support the depreciation study I performed for the Shared Services Unit as of September 30th, 2022. I'm a professional engineer and a certified depreciation professional with over 40 years of depreciation experience. By way of background, the company's currently approved depreciation rates were based on a September 2010 study and have remained unchanged even though the company's depreciable assets have grown from $372 million to $1.3 billion. Approval of the updated depreciation studies will ensure that the life and net salvage parameters used by Atmos Mississippi to recover depreciation expense are in line with the life and net salvage expectations for those assets providing service to Mississippi customers. The depreciation studies in this case, like the ones in 2010, were performed using what's called the equal life group methodology that the Commission has approved for Atmos's use in the past. The ELG procedure promotes a more accurate recovery during the life of the assets. It also ensures intergenerational equity by allowing depreciation expense to be recovered from current customers who actually use the assets, rather than deferring some of those costs to future customers who must then pay for assets that are no longer in service. The only reason to adopt the ALG method is if the Commission desires to reduce depreciation expense. Adoption of the ALG method, coupled with the approval of the company's proposed depreciation parameters, would reduce the company's proposed depreciation expense by approximately $11.8 million. Overall, the company has proposed service life changes for 22 accounts and net salvage changes for 21 accounts. And the detailed information regarding these accounts and the proposed changes are provided in my direct exhibit, DAW2. The shared services study that hasn't been challenged and depreciation rates should be approved are provided in exhibit DAW3. As a general matter, the life parameters requested by the company reflect the consideration of all the relevant factors that must be considered in establishing lives. This includes performing multiple visual fits of the life analysis, the consideration of relevant operational experience, and the company's future expectations for those assets. The company's proposed net salvage rates also strike a reasonable balance between recognizing the necessary change in net salvage while also mitigating the full impact that the adoption of the results would have had on current customers. My rebuttal testimony explains that the positions taken by staff witness Mr. Garrett on the service lives for 5 accounts is improperly limited to a single geographical or graphical analysis and fails to acknowledge and consider input provided by company personnel who have actually operated and have operational experience for these assets and information specific to the Mississippi Division that affects the lives of these accounts. I urge the Commission to approve my life and net salvage parameters as they will result in depreciation rates that allow a more equitable allocation of capital cost for Atmos Mississippi's current customers and the company going forward. Thank you.
We tender the witness.
The staff has no questions for this witness.
Good. Thank you. Now you can go home. Thank you.
We call Thomas True. Troop, for the record, could you state your name and by whom you're employed?
My name is Thomas Troop. I'm employed by Atmos Energy Corporation.
Did you file direct and rebuttal testimony in this case?
Yes, I did.
Do you have any additions, deletions, or corrections to that testimony?
I have two corrections to my direct testimony, and they are both on page 8. Line 6 on page 8 should be stricken entirely. And then on line 21, at the end of that line, rate schedule number 304 is repeated. The second 304 should instead be 305.
Mr. Troop, with those corrections, if I ask you the questions in your direct and rebuttal testimony under oath today, would your answers be the same?
Yes.
To the witness. Oh, hold it a second. Have you got a brief summary that you could provide the commission?
It's not in there?
No.
No, you do. You may continue.
Okay. My name is Thomas Troop, and I can answer any questions you have regarding the company's revenues at present rates, the proposed rates, and the revenues at those proposed rates. In this case, I have relied on company witness Paul Robb's class cost of service study as a guide to allocate revenues among the customer rate classes and to design rates. Theoretically, the revenues received from rates should recover the full cost of providing service to the individual customer classes. In reality, the customer's rate design in other divisions has historically mitigated the cost responsibility of the residential class to moderate the rate increases that residential customers would otherwise experience if they had to pay their full cost responsibility. The company is proposing the same here in Mississippi. The company's proposed rate design continues this approach and strikes a reasonable balance between the revenues being collected from each customer class today and the actual customer class responsibility identified in Mr. Robb's study. It does so by gradually moving the rates for each customer class toward a result that more closely recovers the actual cost of providing service to each of the customer classes. Notably, the residential customer charges proposed by Atmos Energy are within the range supported by staff witness Mr. Matson's and Mr. Robb's class cost of service studies. I'm happy to answer any questions you have.
We tender the witness.
Staff has no questions for this witness.
Thank you.
We call Paul Rabb.
This is the last witness you have on the list? Last
It
witness.
is, Your Honor.
Okay, thank you.
Mr. Rabb, would you state for the record your name and by whom you're employed?
Yes, my name is Paul Robb. I'm a self-employed economic consultant.
Did you file direct and rebuttal testimony in this case?
I did.
Do you have any deletions or corrections you need to make to that testimony at this time?
I do not.
If I ask you those questions under oath today, would your answers be the same?
They would.
Do you have a brief summary of your testimony you can share with the commission?
I do. Good afternoon, Commissioners. My name is Paul Robb, and I'm here to answer any questions you have about the company's class cost of service study and the resulting assignment of costs to each of the customer classes served by Atmos Energy. While the staff does not dispute the accuracy of the way in which the company has assigned the costs to serve each customer class, staff seeks to change the way in which distribution mains are classified for cost assignment purposes as 100% demand-driven. The Commission should reject this proposal because it is results-driven and incorrectly assumes that residential customers receive the benefit of distribution mains only during peak times. In reality, residential customers benefit from system access and readiness during both peak and non-peak times. Consequently, the company's approach recognizes that distribution mains serve both customer-related purposes, such as delivering gas to the individual customers, and demand-related purposes, which occurs when gas moves on peak days. This classification approach that I use is called the minimum system method and is endorsed by NARUC. Staff's recommendation that Atmos Energy be required to provide a study to identify every gas main and its specific service characteristics should also be rejected in light of the costs and the inevitable subjectivity of such a study. There is also no benefit in performing a new class cost of service study every 2 years, as staff recommends, unless the Commission is committed to assigning customer class cost responsibility to more closely reflect the actual costs incurred to serve residential customers, which will mean higher rates for these customers. And I'm happy to answer any questions on these issues that you may have.
We tender the witness.
Staff has no questions for this witness.
Thank you, Mr. Rabb.
Thank you, Your Honor.
Yes, sir.
Atmos Energy rests its case.
Okay. I do think Commissioner Stamps has a question.
Okay.
I do have one question. I appreciate all of the thorough testimony and dialogue. One of the things that's in the best interest that I believe of the state of Mississippi and ratepayers is growing the customer base. Right now, Mississippi is about 55,000 housing units short, and this could probably go both ways from the staff side to Atmos's side. Just and if you don't have the answer today, just get it to me. In both recommendations, how much resources are we putting towards growing the population, whether it be rural expansion or investing in growing like multifamily housing and economic development and those things to help grow the population? Because I think that's in the best interest of ratepayers is to get more ratepayers on the system in order to stabilize the finances for the future. So in both sides' recommendations, could you just highlight and illuminate that part of both of your recommendations so I can take a look at it?
You're talking about it in the profile briefs we're going to file.
Right.
Yes, sir.
Thank you.
Thank you, Commissioner Stamps. Thank you, Mr. Smith. Atmos rest?
Yes.
Okay. Before we transition, let's take a 5-minute break, and then we'll come back and pick up where we left off. We'll get started again. Ms. Kruger, you're recognized.
Mr. Chairman, before we get started, for the record, I just wanted to move to admit all of staff's witnesses, pre-file direct testimony, and accompanying exhibits into the record for this proceeding pursuant to Rule 15-103.6.
And do you know if all your witnesses have been sworn in? I think they were all here.
We have one who is arriving within an hour or two. He'll be here tomorrow.
Okay. Please call your staff's first witness.
Mr. Chairman, the staff calls Lane Sisung to the stand. Please state your name for the record.
Sure, it's Robert Lane Sisung.
By whom are you employed and what is your position?
I am employed by United Professionals Company, LLC, and I am the president.
Please provide your educational and professional background, Mr. Sisung.
Sure, I got an undergraduate from Louisiana State University in accounting. I then got a law degree from Loyola Law School in New Orleans, and from there I went to the University of Florida where I got a master's of tax law. That was my educational background. My work and regulatory experiences, I began my career working in a family business. We had a broker-dealer, and I created the entire accounting and regulatory infrastructure for a broker-dealer, and an SEC broker-dealer, Securities and Exchange Commission broker-dealer, and investment advisory firm. From there, I created a mergers and acquisition department, and then I moved into infrastructure development. And then about between 10 and 15 years ago, I fell into providing regulatory consulting services for utilities, for regulators of utilities. And for the last 10 to 15 years, I've spent most waking hours providing consulting services to regulators of utilities in matters of rate making, prudence, mergers and acquisitions, and other endeavors.
Are you the same Lane Sisung who submitted pre-filed direct testimony in this proceeding?
I am.
Do you have any additions, deletions, or other revisions to that testimony that you need to make?
I do not.
If I were to ask you the same questions that were included in your pre-filed direct testimony today under oath, would your answers be the same?
They would.
Would you briefly provide your summary for the commission?
Yes, I will. Good morning. My testimony reviews the history of Atmos's rate making. And as illustrated, there have been several changes that have been made since 2015, but every single one of those changes has been to the benefit of the company and has increased cost to ratepayers. I described that the system integrity plan and the associated system integrity rider, and then I identify in my testimony all the times that staff has issued concerns to the commission about the spending associated with those, with the plan and the rider. I further illustrate how the originally provided SIP 2015 budgets that were provided in 2015 have been exceeded in every year since the program has been put in place. And then they also update those budgets annually, and I show that those amounts have been exceeded in every year since 2016 except for once. Since 2018, rates have increased by more than 4% in every year but one. But due to the separate SAR, SIR construct, the two different riders, typically this commission has hearings for any rate increases at over 4%, but because they've been two different mechanisms, this commission has not had a hearing except for 1 year. I illustrate that over this period of time, rates have risen from $52 in 2015 to $85 today, and that with Atmos's proposal in this rate case, they would go to $97.77. Further, based on the projected spending that Atmos has provided to staff, those rates would increase to $142.90 just by 2030, 5 years forward. I then present Atmos's proposed revenue requirement of $293 million as compared to staff's proposal of $214 million. I next address the cash working capital adjustment and rate base. Atmos improperly includes non-cash items in a cash working capital rate base adjustment. Those non-cash items are depreciation, deferred taxes, and return on equity. And I explained in my testimony why it's inappropriate for each one of those. Those do not require cash outlays, and they don't belong in a lead lag analysis. I further opine that if the SRA is continued, that the lead lag study that was presented in this case needs to be what is used to establish the cash working capital, because to use the 45-day rule would increase rate base when the evidence shows that rate base should be decreased. I next address net operating loss carry forward ADIT and rate base. And first I explain that Atmos Corporation has used the utility generated net operating loss carry forwards. They've used them to lower the taxes, and the shareholders their shareholders have gotten that benefit. But then when it comes time to creating the rate base for the customers, they don't want to give the ratepayers the credit for the fact that they actually used it. So the shareholders get the tax savings, but they don't want to give utilities, ratepayers, the rate reduction. And I say that that's inappropriate. And I point to several support for that. Additionally, I point out that although Atmos Division has the ability to actually create each division's own NOLC, it doesn't do that. It allocates it, and I suggest that it should actually calculate each entity's NOLC. And finally, I address the request to include the corporate alternative minimum tax into rate base. That's a new tax. Atmos doesn't have any, and I suggest that we wait until they have some and we actually see what the proposal is till we decide whether or not and how we're going to include it in rates. And that's the end of my summary.
Mr. Chairman, the staff tenders Mr. Sisung for cross-examination.
Thank you, Ms. Kruger. Mr. Perrin, you need a hand? Colton's over here.
Connor.
Connor's over here.
That doesn't look good for me.
That's right. I know.
I need a better director, a better producer, you know.
Hey, he'll be there next time. You're recognized.
Thank you, sir. Good afternoon, Mr. Sisung.
Good afternoon.
So yesterday, Mr. Jones started off the cross and Ms. Collins talking about policy. And he had a part of a statute. He had the full statute. I'm going to hand it to you. Is that okay?
You may approach it.
Now, I want to direct your attention to paragraph 1I. Are you there? It's a little long. You can take your time, give you a chance to take it in. Starts with respect to rate-regulated public utilities.
7732, is that what you're on? Or is that?
Yes, sir.
Oh,
3,
okay.
2, 1, and then I believe.
Okay.
Okay.
All right. Now, under that statute, isn't it a Mississippi policy that the commission encourage the expansion and deployment of existing and emerging technologies to foster more reliable and resilient utility delivery systems?
That's what the statute says.
Okay, so that's a policy for the commission to follow. Now, yesterday we had a wagon full of some materials. I don't know if you had a chance to look at it, but piping materials that Mr. Kime discussed. Okay?
Yes.
There were some modern piping materials, plastic, and they're used in the system integrity work that Atmos Energies does. Would you consider that to be existing and emerging technologies to foster more reliable and resilient utility delivery systems?
I want to make sure I answer this correctly. I do consider it to be an improvement, whether it's existing and emerging, whether it's an emerging technology, I'm not aware. I don't know how old the technology is.
Okay, well, it says existing, it could be
Yeah.
existing.
Yeah,
right?
that's true, yes.
Okay. And the gas distribution system, it's certainly a delivery system, right?
Yes,
And it's operated by a utility.
yes.
Good. Now, also in this, this is something that Commissioner Stamps was asking about. It talks about supporting economic development, right?
Correct.
That's another policy. And does it say anything about treating gas utilities different than electric utilities? I mean, you can look at the whole thing. I was really just referring to I, but
Yeah, I don't believe it would, but I haven't read the whole thing in preparation for this. I just want to take a look.
sure, I'm not trying to trick you. Please read.
No. No, I do not see anything within those policies.
Yeah, because in I, it starts off, the preamble is with respect to rate-regulated public utilities and natural gas utilities that are rate-regulated, they would be under this policy.
Yeah, I mean, this is one policy of how many A through I includes, but yes, that one policy, I agree.
All right. Now, I want to switch gears to something that was discussed recently, and it was during discussions with Mr. Christian and Mr. Descendus. And we had an exhibit that was being handed around, and it was used for equity ratio, and I forgot the number that staff gave it. If staff can, Ms. Kruger and Mr. Jones could help me with the number, but it's exhibit JTC R2 to Mr. Christian's rebuttal. Big, long listing. What the exhibit number was? Yes. Got you too, huh?
Jake may know.
You may.
Have you reviewed that exhibit, Mr. Sisung, in any recent time frame?
Not in any recent time frame, no.
Then I'll let you go through that. It's entered. I just don't remember what number it is, but. So the record's clear, Mr. Sisung's reviewing staff 11. And please look at the state column. Because let me ask you my question too, and then you can make this work faster. There's no decisions that are reported from Mississippi in that exhibit, are there?
I'll take your word for it.
Okay, okay. And so now I understand that you're reviewing all of the formula rate filings by the investor-owned utilities in Mississippi. This may be a little bit of a quiz show, but can you recall what was Atmos's ROE in its last stable rate filing?
I actually did not do that myself.
Okay.
Other people in my firm did, but just to try to move this along, I'm guessing, if I get it wrong, correct me, because I think I heard Mr. Descendus say it was 10.41, but I'm not sure of that.
Okay, that's the current one, but how about 10.19? Does that sound close?
I'll take your word for it.
Okay. And there's electric utilities that have a formula, and their results are a little bit different, but for MPCO, did you review the last PEP filing?
I did not.
Okay. What about the last Energy Mississippi filing?
I did not.
Okay. I also want to quickly ask you a question about another point that you mentioned in your summary. You talked about Atmos Energy exceeding its system integrity budget. Did I say that right?
To be perfectly clear, that in 2015, there were SIP annual budgets that were provided with the request to pass the SIP, and that has been exceeded in every year. and that since 2016, Atmos annually updates its SIP spending
Mhm.
projections, and that's been exceeded in every year but one.
In the system integrity category, right?
That is correct.
If you looked at the total capital category, did Atmos Energy exceed it by any material amount?
I'm unaware.
Okay. Now, in this case, the way I view it, there's two parts to this case. There's a base rate decision that has to be made for a rate November 1st. That'll become effective November 1st. Is that right?
That is correct.
And then there's a second part about what riders, what will the stable rate filing look like, and how we'll set rates in the future. Is that correct?
I would agree with that characterization.
Okay. Now, with the rate case, UPC recommends that that Atmos Energy use a historical test period only. Correct?
That is correct.
All right. In this case, that would be a date ending calendar year 2024, correct?
That's correct.
Okay. Even though the new rates are going to go in effect in November 1st, right?
That's done with historical test years and represents regulatory lag, correct.
Okay. And the calendar year 2024, when you calculate rate base, do you use an average in Mississippi?
Mr. McGuckin looked at the rate base. I don't know if they use a ending average or a 13-month, or I didn't look at that aspect.
All right, let's make it simple. Assume there's an average beginning and ending.
Okay.
Okay? So that wouldn't even reflect the rate base at December 31st, 2024. It would reflect sort of half of the rate base.
Agreed.
Okay. Now,
I mean, of course, that's assuming that's what it does.
right,
'Cause I
right.
don't know.
But averaging is different than end of year.
Correct.
Okay. And if rate base is increasing, you're not getting the full amount of the increase that occurs in that year because you've averaged it, right?
That is correct.
All right. So I'm going to
Well,
go.
I need to restate that. You get it later.
Right.
It's not
In
that
the
you don't
subsequent
get it.
rate change.
Yes, yes. You always get your return of capital.
Well,
It's when you get it.
it's when you get it. It's also, did you get it? Because as it goes along, doesn't the net book value of assets decrease as they're depreciated?
Yes.
Okay, so the value that's calculated on an asset, the return on, it changes every year.
The return on,
Yes, changes every year. And every year it goes down, right? The return on, that's included in the revenue requirement.
the return on, the return of.
Return on.
The return on goes down every year on a particular asset.
Yeah,
Yeah, the return on does, but that's not a return of capital.
I didn't say that. My
Okay.
question is return on.
Okay.
Okay, we're on the same page.
All
We're
right.
doing good. We're
All right.
doing good. Now, I'm going to go to the commission rules. And I don't have a copy. I know there's copies here. And I don't want this to be, this is not a quiz show, just me and you talking about rules. Now, direct you to Rule 9, excuse me, 9.105. Give you a chance to look at that.
You have a page? Okay, 46, thank you.
Oh, thank you.
Yes, I see that.
Now, under that procedural rule, the utility gets to select the test period in the notice of intent, right?
In a rate proceeding, it has to, I've not read this entire set, so I don't know all the rules that come in front of it.
Mhm.
But assuming that I understand what this is for, they have to, in their notice of intent for a request for a rate case, indicate what their request for a test period is,
Right. They shall state the test period in the notice of intent, right?
for their request. That is correct.
That's right. Okay. Now, let's go to Rule 21.102.
I cannot believe I turned the pages and there it was.
There you go. And under that rule, 21.102, the utility has the right to select a test period for measuring its rate base. That is the 12-month period beginning with the proposed effective date of the new rates set forth in the notice of intent, right?
You need to ask that question again. I don't think I agree with the characterization.
Sure. The utility has the right to select a test period for measuring its rate base. That is the 12-month period beginning with the proposed effective date of the new rates set forth in the notice of intent.
I disagree with that.
Okay, why do you disagree?
Because I think the commission has the right to authorize a 12-month period beginning with a proposed effective date, but I don't think the utility has the right to decide which type of test year will be used.
But it gets to select what gets filed, right?
Well, that's going back to the application in the prior rule where you were talking about what's in your notice of intent. You get to put what you're asking for in your notice of intent.
That's right.
The commission decides what gets selected.
And all I'm saying is the utility gets to select what goes in the notice of intent.
Just in the notice of intent, correct.
And it can be, in this case, a test period of November 1st, 2025 through October 31st, 2026, correct?
Agree.
And that is the period that Atmos Energy did submit in this case, right?
Agree.
All right. Now, going to Rule 21.1011, okay? This is a little different rule. It's phrased differently. Have you had a chance to read it?
Yeah, let me read 100 because it refers back to it. I want to mark on something. Okay.
Okay. Now, that one starts off with the commission shall, right?
It does.
Yeah. So if I'm going to paraphrase it, under this rule, the commission must give consideration to plan additions placed in service a reasonable time after the test period, right?
They shall give due consideration to that.
Right. So the commission must consider forward-looking information under this rule.
Well, just so you read this rule in its totality,
Right.
it says in arriving at such a rate base.
Mhm.
So if you go back one paragraph up, it makes clear that they're going to ascertain and fix the rate base of the property of the public utility in such a manner as to be fair both to the public utility and to the consumer. So I think you have to look at all of this together. So I would agree with you that the commission shall give due consideration to that, but as they're giving that consideration, they have to consider that in a manner that is both fair to the public utility and the consumer.
Okay. So I want to discuss the formula rate plans of some of the other utilities operating in Mississippi. Do you have a working knowledge of those other rate schedules?
Not much.
Would it be helpful if I provided you some?
We'll need to do that.
I mean, you've reviewed them before, right?
As I said, other people in my office have reviewed them.
Commissioner, I wasn't planning on marking these as exhibits. I was sort of under the impression that you would take judicial notice of your approved rate schedules, but if I have to mark them, or if you think it'd be helpful, I would.
Any objections?
No objection.
No objection. We'll
Okay.
have 4 up here.
Can we trade? All right, thanks.
This would be Exhibit 1 or Atmos Exhibit 1. Yeah.
Could I ask Connor to give me a hand here?
You mean Colton?
Yes.
Madam Clerk, if you'll enter this in as Exhibit 1 for Atmos.
Okay, and I'm gonna mark for identification. Oh, I'll speak into the record, Tom. I'd like to identify for the record the Energy Mississippi Formula Rate Plan Rider Schedule FRP 7 as Atmos Energy Exhibit 1.
No objections, so enter that in as Exhibit 1. Thank you. Connor, if I can get an extra copy of that, please.
I would like to mark as Atmos Energy 2 the Rate Stabilization Adjustment, Rider RSA, for Spire, Mississippi. Yep. Here.
We can share.
We just need Exhibit 1, a copy of Exhibit 1.
All right, and then I have Mississippi Power's also marking for identification as Atmos Energy Exhibit 3, the Mississippi Power Company's Performance Evaluation Plan, PEP 6.
Ms. Kruger, any objections?
No objection.
Okay.
Yes, sir. Okay. Now, I'm going to start discussing the Energy Mississippi Formula Rate Plan. When I discuss it, I'm going to use the initials FRP to communicate that. Is that okay with you, Mr. Sisung?
Yeah, that's fine.
Okay. Now, under the FRP, Energy Mississippi can include forward-looking adjustments to rate-based revenue and operating expense, correct?
That's my general understanding, but if you wanted to, we pulled it out.
Attachment C would be the place to look. That's part of it. I think the other piece would be section 3.C.1 and note 1.
As I said, I'm not familiar with this, and I in no way want to come off as disputing my general understanding that ELL, Entergy Mississippi LLC, has a forward-looking rate year, but as I read this, I think you have to read it pretty liberally to get there, if there's nothing more to it.
Well, there's a known and measurable adjustment section, right?
Yeah, but known and measurables are generally just that, known and measurable,
Right, and they're, and so
not
we have
projections.
there's a historic test year that's there, and then you make layer known and measurable adjustments on top of it.
Yeah, and what I'm saying is in traditional rate making, known and measurable is a forward test year is not a known and measurable change.
Okay, so you distinguish between an adjustment and a fully forward test year.
Correct.
Okay.
And so that's why I've always heard everyone say that EML has a forward test year, but as I read what I'm reading here, I don't interpret it that way.
No. I guess my term should be, say, forward-looking elements. Would that be a way to describe it?
Yeah, that's fair.
Okay, but the elements are to rate base, operating expense, and revenues, right?
Correct.
And those are all the pieces that go in the revenue requirement, right?
Wait, you said, I said correct, I shouldn't have. Ask your question again.
Rate base, operating expense,
Yes.
and revenues.
Yes, I found it, yes.
Okay. Now, and the same thing with Mississippi Power Company. Its tariff is very similar to Energy Mississippi's. That's number 3. And I direct you to section 3B1 and note 4, and then PEP Appendix A, section 5.
Which sections again? I'm sorry.
Sure. Section 3B1 and note 4, and then PEP Appendix A, section 5. Appendix A, section 5 is the equivalent of attachment C in EMLs. And then the language in section 3B1 and the note 4 are substantially similar to Energy Mississippi's language.
Yeah, I would concur with that.
Okay. Now, and then Spire has forward-looking elements as well, and that's on page 15 of 16 of that rate schedule. In the other adjustment section. There's some known and measurables, and then there's some other adjustments.
Yes, I see those.
Okay. So we're in agreement that there's forward-looking elements in the Mississippi Power Company PEP and in the Spire Mississippi rate stabilization.
Yes, I agree.
Okay. Now, if UPC's position is adopted in this case regarding the riders and the mechanisms we use going forward, Atmos Energy would no longer be allowed to include forward-looking elements in its annual filings, right?
Well, I think you have to, I think you're not taking the entire UPC recommendation.
Okay.
So the entire UPC recommendation is to propose a historic test year. And then we specifically state that the commission should consider any additional requests made by Atmos that are fully supported to explain why they would want to recover things such as forward elements. So we definitely have a 2-tier structure. We have a base of a historic test year, but we also, within Mr. Berg's recommendation, specifically recommend that the commission consider any well-supported request for an additional type of recovery be considered. We chose a historic test year as our base to try to instill discipline in where we've come from and to where we're going. So by use of a historic test year, we can establish what's actually been spent, typical regulatory lag, and create a, like I said, we're trying to instill some discipline in how the capital plan is put together. But if Atmos comes and says, we have this, I don't see the piece of pipe anymore.
Okay.
But if Atmos comes to the commission and says, we've got this many miles of this pipe that needs to be replaced with this pipe, and this were replaced, and the improvement that that's going to make to the metrics, we believe the commission should consider that, and if it was well laid out, we would support it.
Okay. And is that different than what's in the stable rate filing and the system integrity rider today?
In our opinion, it is extremely different.
Okay. But you would have a stable rate filing that would say something about the commission can consider forward-looking information to set rates?
If it's well supported, yes.
Okay. Now, under the FRP, Energy Mississippi's cost of equity is recalculated each year pursuant to a formula, correct?
That's my understanding.
Right. Same's true for Mississippi Power and Spire also, right?
That is my understanding, yes.
Okay. Are you proposing any change to the formula used to calculate Atmos Energy's cost of equity under the existing stable rate?
When you say you mean?
UPC.
Okay. Yeah, Mr. Mayo has recommended that the actual cost of equity, that the actual return on equity that is supportable by analysis and approved by this commission be the ROE that would be used until a new analysis would be presented.
Okay, so that when you say analysis, that would be the testimony that Mr. Mayo's filed in this case?
Yeah, I honestly believe that the commission has the ability to look at the testimony Mr. Mayo filed in the case, testimony that Mr. Descendus filed in the case.
Okay.
And then they can make the determination on what the appropriate ROE is for Atmos.
Okay.
And then if either side moving forward believes that the financial markets have changed in any way, then they can come back to the commission and make a proposal that that ROE be changed.
Okay, so we wouldn't use the formula approach that Mississippi Power and Energy Mississippi and Spire use for Atmos Energy, right?
That is not the recommendation of staff.
Okay. Now, under the FRP, Energy Mississippi's return is adjusted for performance in the areas of price, satisfaction, and reliability, correct?
Can you say that again? Because I don't deal with this calculation.
Sure. Under the FRP, Energy Mississippi's return is adjusted for performance in the areas of price, satisfaction, and reliability.
Walking around the halls of my office, I've generally heard something like that, but I couldn't attest to a direct knowledge of it.
Okay. Do you understand that to be the same for Mississippi Power?
I'm happy to take your word on it because I just don't know for sure,
Okay.
but it generally sounds right.
Okay. Now, is it UPC's position in this case that Atmos Energy would no longer be allowed to have a performance adjustment in its annual filings?
I think that's my recollection of the testimony. It's not my testimony, but that's my recollection.
Okay. So then Atmos Energy's formula rate would differ from Energy Mississippi and Mississippi Power's in that respect.
Yes.
Now, in the Energy Mississippi FRP, there are no caps on capital spending, correct?
Well, there's no caps on capital spending, nor do I believe there's anything akin to the SIP or the SIR.
Okay. Well, I mean, there's forward-looking, the SIR is a forward-looking mechanism, right?
Correct.
And there's a forward-looking element in the EML FRP, correct?
That is correct.
Okay. So, and there's no caps in the Mississippi Power Company PEP either, right?
That's correct.
Or the Spire, Mississippi.
Yeah, I'm going to answer all three of those. I will take you at your word. I do not know that for a fact.
Okay.
I'll take you at your word for that.
Okay. But if UPC's position is adopted in this case, you can say definitely that Atmos Energy would have a cap, right?
They would have a cap on the historic test year with the ability to request recovery of anything that they can adequately support.
Okay. Now, I'm going to switch gears to a Louisiana case. Are you familiar with the Louisiana Public Service Commission docket number U36625 entitled Application for Approval of the Energy Future Ready Resilience Plan?
I am, yes.
Okay. Now, that was an Energy Louisiana proceeding, right?
It is.
And you filed direct and cross-answering testimony in that proceeding, right?
Yes, I did.
Okay. And you said it is. Is it ongoing in some way?
It's currently ongoing.
Okay. I'm going to mark for identification as Atmos Exhibit 4 the LPSC Order U36625 dated May 10th, 2024. It consists of 7 pages and it has an attachment 1 entitled Framework for Implementation of Future Ready Resilience Plan, Phase 1, and that framework has exhibits A through C. I would like, thank you, Connor, for helping us. I know that Jake is helping out the staff. It's not easy to do all this.
Jake and Connor both have silver stars today. We're going for gold, though. Going for gold. You entering this one in.
And this is, I'm gonna offer into evidence Exhibit A for the LPSC order number U36625.
Ms. Kruger, you looked at it?
Yes, I have no objection.
Okay, hearing no objections. Madam Court Reporter, enter that in as item number 5. Exhibit 4. You may continue.
Okay. Now, for people in this room, the resilience plan was a massive set of grid hardening projects to be executed system-wide by Energy Louisiana over 10 years, right?
That's correct.
Okay. And then in this docket, Energy Louisiana broke up the resilience plan into phases and asked the LPSC to approve the first 5 years of the plan with an estimated cost of approximately $5 billion. Does that sound right?
That matches my recollection.
Okay. Now, Energy Louisiana also proposed to recover the resilience plan capital costs through the resilience plan cost recovery rider, right?
That is correct.
Okay. Now, you are not the only consultant retained by the LPSC in that docket, right?
That is correct.
Okay. The LPSC retained an engineering consultant, CSRS LLC. Is that right?
That is correct.
Okay. And you were retained to provide rate making and financial expertise. Is that fair?
I don't know that it was strictly limited to that, but that's fair.
Okay. Now, the engineering consultant was retained to advise the commission on what projects and level of cost that the commission should approve, if any, right?
Yeah, I would agree with that.
Okay. And what happened, and if you need something to help refresh your recollection, I can, but see if we can do this just with questions. The engineering consultant gave the commission 4 options: a $732 million spend over 5 years and 10 years, and a $2 billion spend executed over 5 years and executed over 10 years. Does that sound?
I will take you. I have zero recollection of that, but I don't doubt it. I'm happy to move the docket along and accept your representation of that.
I'm going to hand you your direct testimony, because I want you to be comfortable up there. I don't want you to. I hid it from myself. I apologize. I don't intend to enter this in the record. It's just to refresh Mr. Sisung's recollection so that he can answer questions. I think my questions are going to be clear enough that we can do without it. But if someone wants it in the record, it's a very thick document, and so I only made 3.
It's already, it should be already in the record. So it's, as long as it's okay with,
No, this is the, I'm sorry, Chairman. This is the direct testimony of Mr. Sisung filed in the docket.
it's in the record.
In the Louisiana docket.
Oh, in Louisiana.
No, in the Louisiana proceeding that
Okay,
the order
okay.
came from.
Let's,
Oh, I do have 3 copies.
he didn't necessarily request it be in the record. He just wanted to use it as a record to allow Mr. Sisson to recall.
Yeah, I mean, it's just
Okay.
to refresh his recollection.
There's no objection.
Okay.
She said no.
No, I think I have one more copy.
Thank you. You may continue.
Okay. And so, kind of help guide you, could you look at page 19 in table 1 and see if that helps refresh your recollection of the recommendations that the engineering consultant made?
Okay.
Okay. And so I'm going to put my question again to you. Now that you've had a chance to refresh your recollection, the engineering consultant gave the commission 4 options, and they were $732 million in projects to be executed over 5 years, $732 million in projects to be executed over 10 years, $2 billion to be executed over 5 years, and $2 billion to be executed over 10 years. Is that the options that CSRS gave?
Yes, that's correct.
Okay. Now, these amounts, the $732 million and the $2 billion, they were not caps. They were Class 5 estimates of the cost of the capital project groupings recommended by the engineering consultant, right?
As to the Class 5, I'll have to take your representation for it because I just don't remember, but if that's what it was, it was.
Okay. And there was an expectation that the power company, as it did this work, it would go from a Class 5 estimate, which has much uncertainty, to a Class 3 estimate that would then be used for the rider.
Once again, I just don't have a specific recollection of that, but if that's what it said and you're representing that, I trust you.
Okay. Now, and your testimony dealt with the resilience resilience plan cost recovery rider specifically, correct?
It was more than that, but it did discuss that.
Well, no one else testified on the rider, right?
That is correct.
All right, I'm sorry, I may have misspoke. Now, and then you made so you made these recommendations on whether the LPSC should approve the rider, correct?
Yes, that's correct.
And you took the position that the need for the rider depended on the level of spend supported by the engineering consultant and approved by the commission, right?
That's correct.
Okay. Now, let's discuss the Energy Louisiana Resiliency Rider in a little more detail. The rider is Exhibit A to Attachment 1, attached to the LPSC order.
I'm sorry, it's to the order. I'm looking at my testimony. I apologize.
Oh, no.
Where am I going?
You're going to attachment, the rider's Exhibit A to Attachment 1.
Yes, I have it.
Okay. And the resilience rider, it's a forward-looking recovery mechanism, right?
That is correct.
All right. And the rider rate is set on a projected revenue requirement and then trued up to the actual revenue requirement later, right?
That is correct.
Okay. And that's similar to what happens in the stable rate filing and the system integrity rider today that we have now prior to this case.
Well, I mean, I don't know how narrow or wide your question. I don't know how narrow or wide your question is.
Okay.
So if you're specifically asking about mechanics, yes, but if you go even through the order, you'll see framework for implementation, and then there's accountability metrics, and we're doing prudence reviews of all the projects. So it's a much broader.
Okay, we'll cover those. I'm going to cover some of those things. That's right. Now, you did not oppose the use of a forward-looking revenue requirement in the rider, did you?
Depending on the level of spending, right? That's what we talked about earlier.
Mm-hmm.
I opposed the rider if it wasn't.
You opposed the rider at one level.
Correct.
But at another level.
That's correct.
You were okay with the rider.
That's correct.
All right. And you didn't oppose the forward-looking part of it, right?
That's correct.
Okay. And like you were mentioning, the rider also has a procedure through which the LPSC staff reviews the prudence of the resilience plan project costs after each project is complete, right?
Yes, and we've just begun that process.
Good. And that's discussed in Section 3C of the rider. Did I get it right, the section number?
I'm looking for it. I'm sorry, I'm sure.
I mean, you were talking about that there's a procedure going on.
Yeah, I don't know that it's in the rider, maybe in the order. I just don't recall.
Okay.
I mean, the rider's about setting the rates. There's a true-up report and a prudence review in Section C. I see it, yes.
Yes. All right, that's exactly it. So in Section 3, the rider says that there's going to be a true-up and there's going to be a prudence review.
Yes.
Okay. Now, you've stolen a little bit of my thunder, but the LPSC approved $2 billion of projects to be executed over 5 years, right?
Yes.
Okay. And the LPSC also approved Energy Louisiana's forward-looking rider as proposed, didn't it?
There is one caveat, and I might need to find it in the order. I just remember going through it. There was a reservation, or at least there was supposed to be a reservation when we were doing the settlement. That never happened. I don't know if it made it in the rider, that the LPSC reserved the right to discontinue the program at any time if they were unhappy with the pace of the spending or the impacts of rates. if I need to sit here and look and see if that's in here or not, or if you know it is, I don't.
I don't recall the language, but I do know the commission has plenary authority over rate making in Louisiana. So that would not surprise me whether it's written or not written.
Okay. So with that, can you ask the question again so I make sure I answer it
Sure.
for you?
My question was, the LPSC also approved the Energy Louisiana forward-looking rider, didn't it?
Yes.
Okay. Now, you can put that to the side unless there's something that's, and we're gonna start to switch to your testimony, and I've got a real quick little piece. Now, Mr. Sisung, the bulk of your experience is from the Louisiana jurisdiction, right?
And at FERC regarding Louisiana rate making.
Okay. And then in Louisiana, it has been recognized that the public interest is served by reasonable and proper rate increases, notwithstanding that an immediate and incidental effect of any increase is improvement in the economic condition of the regulated utility company. Correct?
That was a huge mouthful, so I'm gonna ask you to say it one more time.
Sure, I'll
because
say
I was
it.
following I got about 3/4 of the way and then I tailed off, so.
Okay. Well, I mean, this is just so that we're on the same page, folks in the room may not appreciate what this, but there's public interest testimony that often gets filed at the Louisiana Public Service
Absolutely.
Commission.
Yeah.
And the witnesses talk about that public interest standard.
Yes.
And this is a phraseology that comes from that, and I'm going to say it again slowly. And my question, in Louisiana, it has been recognized that the public interest is served by reasonable and proper rate increases, notwithstanding that an immediate and incidental effect of any increase is improvement in the economic condition of the regulated utility company. Correct?
Yeah, I wish I could see. I absolutely agree with the first part, but I'm not following with the improvement of the economic conditions.
Showing my game plan. Excuse me, I'm sorry.
You may approach.
Yeah. I won't look at anything but what you point me to. Okay. All right, no, that's okay. Okay, yeah, I understand it now that I've had a chance to read it. Yes, I agree with that statement. Yes.
Yeah. Can I walk back over there and get one of my folders?
Sure. Yes.
Thank you.
Connor can do it.
Mr. Sisung, I'd ask you to turn to page 13 and look at your figure 2. And I believe it was something that you discussed in your summary.
Yes.
Okay. Now, figure 2 is entitled residential rate, but I think that has to be clarified. The numbers that are on figure 2, they're not rates like you would find in a rate schedule, right?
Residential rate impacts, I mean, it's how much, oh God, man. It's how much a customer would pay using 4.7 MCF at the projection of what we think the rate would grow to.
Okay.
Based on Atmos spending.
Okay, I find using the word rate is not clear. I'm going to call that a projected bill. Are you okay with that characterization?
Yeah, customer impact, but bill customer impact, that's fine.
Okay. And so these numbers, they include both the commodity cost of gas and the rate for the service set in the rate schedule. Is that right?
This is a levelized commodity cost so as to remove any variations it may have.
All right, and it's 4.7 MCF, that's usage.
That is correct.
Okay. And so figure 2 has projected numbers, right?
That is correct.
All right, and these are not bill calculations that came from Atmos Energy, right?
They did not come from Atmos Energy. I believe we've shared them with them throughout our process of negotiations, and there was no pushback on them in rebuttal or in any prior conversation. So they are projections that our shop has calculated based on the information provided by Atmos, and that has been frequently shared with Atmos.
Okay. Well, you calculated, you or UPC calculated the projected bills based on certain assumptions.
That's
Is that
correct.
Okay. Now, you just mentioned this. One assumption is that PGA charges remain constant across the projected period based on current PGA rates, correct?
I don't remember what the PGA price was used for that. So when you say current, this was done months ago. I just don't know what the PGA rate was.
But it's fixed.
But it is fixed.
Okay. And we know, everyone knows here today that PGA rates can fluctuate, right?
They can go up, they can go down.
Exactly. So another assumption that is mentioned is that you assume Atmos's rate request is granted in full, right?
That's correct.
Okay. In your experience, is it typical that utilities rate requests are granted in full?
Well, hopefully not. No. In my experience, there was usually points of contention as between staff and between the company and either through settlement or through the commission deciding which side it picks for each individual incident. The ultimate result is different.
Okay. And so it's not it's typically not the full request of the utility.
Typically, commissions do not accept the full request of utilities.
All right. Now, you also assume Atmos's spending continues as projected today, right?
That is correct.
Okay. And so you assumed Atmos's rate base is growing, right?
Correct.
Okay. You also assumed that depreciation expense was growing, right?
Correct.
All right. You assumed that property tax expense was growing, right?
Yes.
Okay. Did you also assume that liberalized depreciation ADIT would become more negative due to the capital additions? Did you do that part?
I don't think my recollection is the analysis did not get to the level of ADIT.
Okay. If ADIT liabilities increased, that would decrease rate base, right?
It would decrease rate base.
Okay, and so it would lower to some degree the projections that are in figure 2, right?
Yeah.
I'm not asking how much, I'm just asking
Yeah,
for direction.
and as I sit here, I cannot honestly answer whether we did or we didn't include that into the calculation. If I did not include ADIT in the calculation, it would lower it.
Okay, thank you. Now, did you assume that Atmos's number of customers increased in this?
No, I do not believe it did.
Okay. If the number of customers increased, that would tend to reduce the bill amounts you calculated because of increased sales, right?
The answer to that question is yes, and of course the opposite is true as well. If the customer decreased, the numbers would go up.
Okay. Did you use any other assumptions that would tend to reduce bill amounts?
The purpose of this analysis was to show the rate path of growth. So I don't believe that there was any assumptions of retraction. I don't from our perspective, I don't think, I mean, ADIT aside, which would be a reduction to the rate base calculation, which I don't know if we made or we didn't make. I don't know what reductions in growth we would have considered, so no, I don't think we did.
Okay. But we know today from the customer price performance adjuster filings that Atmos Energy prepares. Oh, wait, I'm getting ahead of myself. Now, this $140 per month projection for 2030, would you accept that it translates to roughly $29.98 per MCF to $30?
Sure.
Sure.
It's
Okay.
math, right?
And we know today from the customer price performance adjuster that Florida City Gas's average residential delivered price in the most recent calculation was $33.24 per MCF, right?
Who, what?
No. Florida City Gas. They are one of the companies included in the performance adjuster to calculate the price element of the performance adjustment for Atmos Energy.
Okay.
Okay. Are you familiar with that?
Nope.
Okay. So we've talked about these different assumptions, but sitting here today, no one can predict with certainty what the 2030 residential customer bills will be, right?
No one can predict with certainty what those bills will be.
Right? And sitting here today, even if your projection, that $140 per month, turns out to be 100% correct, you can't tell whether Atmos Energy's 2030 bill will be greater than, less than, or equal to the average residential delivered price of the comparable Southeast gas distribution companies used in Atmos Energy's performance adjustment.
I have not looked at any of those companies, what their capital spending plan is, to be able to come to any kind of opinion as to how this would compare to any other company. So I can't answer that question.
Okay, so sitting here today, you don't know how Atmos Energy's projected bill in 2030 would compare to other gas utilities in 2030.
Without
right?
looking at the other gas utilities and understanding their business plan in relation to what Atmos's business plan is, I would be unable to do that.
Okay. Now, let's switch gears. Let's turn to question 29 on page 19.
Okay?
Okay. I want to ask you about your statement, requests by the MPUS to address putting a limit on the level of spending under the SIR were met with extreme resistance by Atmos.
Yes.
Now, Mr. Sisung, did you personally participate in any of these requests?
I did have calls. I was a participant on calls with Atmos, and I definitely attended meetings with staff.
Mm-hmm.
And whether Atmos was ever at a meeting that I was at with staff, I can't recall, but I think maybe Mr. Bird was.
Okay. So, did you personally hear any of the specific requests that you referenced in that sentence?
Yes.
Okay. Now, I want to make sure that the testimony is clear. You say a limit. Was it a limit like $200 million, or was it a reduction to what Atmos Energy planned to spend?
So I'm not sure I understand the question. So
Sure. You use the word limit.
Yes.
Okay? And a limit could be 200 million, or it could be 61 million, right?
Right.
All right, and the hearer of that information is going to react differently. If they have an expectation that, and a belief that they should say spend, this is just hypothetical, $120 million. And then you come and say, well, let's limit that at 150. All right? That would be one reaction.
You went higher?
Yeah, I went higher.
Okay, yes.
Okay? That would be one reaction. Now, it would be a very different reaction if you said, all right, we're going to spend 120, but our position is that you should be limited at 61. There would be a different reaction, right?
There would be a different reaction, but I would say that in those discussions leading into this, that was not the number we were using. We were using a much higher number.
It was a much higher number.
Yes.
But the number today is 61.
That is correct. Well, once again, you're isolating one piece of the recommendation.
Mm-hmm.
It's 61 with Atmos's ability to come in and show us what exactly the commission would get for the additional spending in terms of what the planned projects could be and what the accountability metrics associated with those projects would be.
And then can you give us a little more explanation about what you mean by extreme resistance?
Yes, we were essentially told no. I mean, we were, and it wasn't, and there was really no like counteroffer, or there was a 1-year counteroffer, if I recall correctly. We'll do it. We'll take this next year down, and then that reduction in the year 1 was moved to the next year to increase it. So it was just a pushing it forward, not a real reduction. That's my recollection.
Okay. When you describe this limit, you call it, it was indeed a reduction to what was planned that you had in your possession from Atmos Energy, right?
Yes.
Okay. So were there any exceptions to the reduction that you communicated to Atmos Energy?
Within that discussion, we were discussing what would go forward in rates, right? Not what could be recovered.
Okay.
Okay. So I don't believe that there was any discussion of what would happen if I don't believe there was any effort to say you can't do what you need to do to keep the system safe. It's what could be recovered in the forward-looking rate mechanism.
Okay.
So the limit was on what could be recovered in the forward rate mechanism. If you spent more than that, it would be picked up in the SRA.
Okay. Excuse me, Chairman, can I confer with my co-counsel?
Yes, you may. And just in light of a break, I mean, you have a few more questions? Can we go and take a break?
If we want to take a break right now, I think that would be okay. I'm trying to see if I'm going to go to a new set of,
Okay.
how many new sets of inquiry I'm going to go into.
Okay. Yeah, we'll take a 5-minute break. Thank you. Hopefully everybody had a good break. You recognize this.
Thank you, sir. I've talked to co-counsel and we're streamlining.
Okay.
Still have a little more to go.
Okay.
Right. So, now, Mr. Sisung, I asked you this question, you gave me an answer, and I want to see if I can get a little more definitive answer from you. To the best of your memory, how many discussions were you in with Atmos Energy about capital spending limits?
As I said, I recall one teleconference
Okay.
where it was discussed, and I recall 2 to 3 meetings where I was with staff, and whether or not Atmos was on the phone or in attendance, I just don't recall.
Okay.
But I will say that the better person to ask that question to would be Mr. Berg, because he was leading the case for my firm at that time.
Okay, that takes care of one of my questions, because I was going to ask you, who was that someone else? And would that someone else be Mr. Berg?
Yes, he would be the better person to ask.
Okay. Now, in these discussions, do you recall where there were any offers by Atmos Energy that reduced other cost components of the revenue requirement, but not the system integrity spending?
Offers by Atmos, I'm not certain. I know that a reduction in the capital was discussed. Whether that was offered by Atmos, received by Atmos, I couldn't answer you. So that's one that comes to mind.
Any other types of offers from Atmos Energy that would affect the revenue requirement, and that would specifically lower the revenue requirement?
Sitting here right now, I don't have that recollection. But once again, Mr. Berg might be a better person.
And I don't want you to be offended by this question, but I just want to make sure, talking to my client, on every time that you participated in either these meetings with staff or teleconference with Atmos Energy, did you disclose that you were present?
Yes. Yes.
Okay, good. Now, do you review the stable rate filing, or that's Mr. Berg?
That's a combination of Mr. Berg and Mr. McGuckin.
Okay, thank you. So I will wait for them. This last question may be right for you or not. I am representing to you on behalf of Atmos Energy that they're going to spend more than $61 million. Where do we go from there?
Well, as your client has said, the rate case is an option.
Mm-hmm.
I think a more productive option would be to engage in a proactive conversation with staff to see if we could develop things. For instance, I'll give you an example that's been talked about here. We're talking about the $60 million cap on the historic test year, and then we're told, well, that doesn't even cover our leak detection. Well, we went back and we looked, and that $70 million number that was given, it was first presented to us in rebuttal as a $70 million number for leak detection. And then when we went and dug back into the original files and records of what was given to us, we could find 4 line items that total to that number. But there were many more items than leak detections included in the number that got to that $71 million. So if indeed that $71 million number is limited to leak detections, there would have been no way for us to know. And I will tell you that staff is completely open to conductively talking with Atmos about identified hazardous leak reductions, customer call-outs, and creating a rate mechanism that addresses those issues. But with the information that we've been provided to date and in the manner it's been provided, we haven't been able to have that discussion. So where you would go from there, you raised it in rebuttal for the first time from our perspective, the specific concern. We would love to have that conversation,
So I take that, would it be, you would be willing to have face-to-face conversations, you, Mr. Sisung, Mr. Berg, the rest of the staff, with Atmos Energy personnel to try to develop some way to share this information in an efficient way? Is that
Yeah.
fair?
That's fair.
You may, yes.
I thank you, Mr. Sisson, staff, thank you, and I have no more questions.
Okay, thank you. And you have an empty folder, but
Got a little carrying.
it's a lot lighter on the way back. Connor to the rescue. Ms. Kruger, you're recognized.
Mr. Sisung, Mr. Perrion asked you about Mississippi policies. In any way, do you intend to run contrary to policy or policies of the state of Mississippi?
No.
Mr. Perrion also asked you about the ROE calculations of other utilities in Mississippi. Is it your opinion that the commission here should just use the ROE formula or the information provided by Mr. Mayu and Mr. Descendus?
I think that this is a rate case. This commission is being provided with a full record from Mr. Mayu and Mr. Descendus of what ROE should be. I think the commission should use that information and come to a determination of what the appropriate ROE is for Atmos, Mississippi.
Mr. Perrion asked you about historical test years and beginning and ending balances. Could a historical test year use an end-of-year balance?
Absolutely.
And Mr. Perrion discussed several FRPs of utilities in this state. Did he show you the CenterPoint or Delta Utilities formula rate?
He did not.
Is it your understanding that the CenterPoint formula rate approved by the Mississippi Public Service Commission is different from the ones he showed you?
With the same familiarity I had with those, yes, it's my understanding that that is different.
Mr. Perrion asked you about the fact that you are not recommending an ROE calculation exactly like Entergy Mississippi and Mississippi Power Company. Is Atmos different from these companies in your opinion?
I believe they are.
Now, Mr. Perrion discussed with you Louisiana Public Service Commission docket number U-36625 related to Entergy Louisiana's resilience plan. Do you recall that discussion?
I do.
Mr. Perrion discussed your direct testimony in that proceeding and the recommendations you made therein, correct?
That's correct.
Specifically related to Entergy Louisiana's resilience rider mechanism, do you remember your recommendation that if the commission were to approve Entergy Louisiana's resilience rider, that the rate of return authorized for the determination of that rider incorporate a lower return on equity than Entergy Louisiana's otherwise authorized ROE?
Yes, I had recommended to the commission that if they go forward with the resilience rider, that the ROE on the forward-looking resilience rider be lower because they would be getting enhanced recovery.
And what was your basis for that recommendation?
My basis for that recommendation, as I just said, is they would be getting an enhanced recovery, and therefore they should not receive the same ROE.
And isn't it true that as part of the monitoring and compliance procedures adopted as part of that program, Entergy Louisiana has to meet certain performance metrics on those assets hardened under the resiliency program or face financial penalties?
Yes, if the polls do not perform as they have been predicted to be performed, Entergy Louisiana has to pay a penalty in with a rate reduction for not meeting that standard.
Thank you.
Chairman, I have one question related directly to the redirect within the scope.
Ms. Kruger, do you yield or? do you- Yeah, we want to be fair, so, and unless it's an objection. Okay.
We can clarify the record then in our post-hearing brief.
Yes, you can clarify the record. Thank you, though. No other questions? Thank you, Mr. Sisson.
Thank you.
Quick question. Your next witness? I'm just trying to allow for time today.
Still misleading.
We, with that, I think we'll conclude today. And Commissioner Stamps?
Thank you, Mr. Chairman. I did have one question, and maybe someone could speak to it today, or they could prepare, speak to it tomorrow, or in their post-hearing brief.
Yes, sir.
In the forward-looking rate-making analysis, how much do we calculate for inflation, and how do we break down the inflation calculation? And does that inflation calculation include the future loss of value of the U.S. dollar in conjunction with the traditional inflation that's normally calculated in our process?
I see some nodding there. So.
Go ahead, Joe.
Commissioner Stamps, the stable rate mechanism has actually a historic test period upon which we layer known and measurable changes. And so it is what those costs are expected to be in the upcoming 12-month period. And we have a pretty good knowledge of what they are going to be. So we don't factor in any kind of expected inflation. It's the actual invoiced costs. We use a historical methodology, so we would say we estimate this project cost to be based on the material costs of last year and the contractor costs of last year. So that's how it works.
Okay, that's definitely a start. I just wanted to make sure that the dollar is devaluing at an accelerated rate more so in the coming years than in the past years. So as we add these things up, let's make sure we're getting that number right.
And that none of that would be calculated in how the rate making works.
Well, could y'all just speak to that a little deeper as you answer your questions in the future?
Thank you, Commissioner. Thank you, Commissioner Stamps. Well, with that, we'll break for today and reconvene this hearing tomorrow at 10 a.m.
10 a.m.
10 a.m. it is. Thank y'all.